Nigeria's benchmark interest rates have been cut for the first time in months as the Central Bank of Nigeria lowered the monetary policy rate from 27% to 26.5%, announcing the decision after the 304th Monetary Policy Committee meeting in Abuja. Governor Olayemi Cardoso said the 50 basis point reduction reflects easing inflation and improving macroeconomic conditions. Other policy parameters remain unchanged, maintaining tight liquidity while supporting economic recovery and investor confidence. Financial expert Muktar Muhammed joins me now for this conversation. Thank you very much for being here. Talk to us in layman terms, the implication of this interest rate cut by the CBN.
Thank you for having me. Good evening. And the implication is that cost of borrowing will go down by 50 basic points. To a layman, if you are borrowing money from the bank, what it says that you are going to borrow at a lower interest rate. That's just it. For a layman, I think that was the only parameter that changes. And again, it was a no-brainer. We expected it to happen because if you look at the economy, what they've said have happened, inflation has come down, exchange rate has stabilized and even still going lower. So definitely there was no reason for the CBN to pull rate or tight rate. Definitely they had to cut rates. So that was the only change that we saw there. Every other parameter remains the same. Liquidity, bank liquidity with the CBN remains the same. Every parameter, but they just needed to change the cost of borrowing. Even if a lot of people expected them to do like 100 basic points, but they just did only 50, which I think is good for a start. Maybe in going forward, we begin to look at how we can drastically reduce it when we have to deal with some headwinds, which are still there, especially in the political year.
Is the easing of inflation and improving macroeconomic condition, is this something you agree with?
Of course, like I said, it's a no-brainer. I mean, if you have said that inflation has come down, you say it is destabilized. So definitely the next thing you need to do is to bring down interest rate, because it doesn't make sense for you to say all those things and then you are still hiking rates. So you have to loosen up a little, and I think they're losing up a little, but if a lot of people expected them to do it to make a very big losing, but again, they are not doing that. And like I said, you look at the headwinds are still there. You have liquidity in the system. Some are outside the banking sector, and again, don't forget that the banks are also doing recapitalization that is bringing up a lot of liquidity into the system. So all these are reasons where they looked at and said, look, we need also to just cut it by 50 basic points, and then we'll see how it plans out.
Okay, they say other policy parameters remain unchanged. Can you explain that to us a bit?
Yes, other policy parameters remain unchanged. What they are saying is that the rates remain unchanged in terms of liquidity with the CBN, in terms of TSA special account, everything remains the same. So it's bank liquidity with the CBN. Every other parameter remains the same. So it just means that we have not really checked anything. We still believe in what we are doing. We have to leave it at where it is. And so when we're talking about that, you're talking about interest rate, bank overnight charges with the CBN, bank fund with the CBN, we still remain the same. So that's basically what they are saying. But the main take of any MPC meeting is the MPR, which has come down.
The Monetary Policy Committee has voted to reduce Nigeria's benchmark interest rate. We understand this is a monetary policy rate from 27. This happened late in May last year.
No. It happened late last year. What the CBN did was to hold rates. They didn't bring it down. They did it in May. I think they just did a 25 basic point reduction in last year. Then people were expecting them to carry over with another cut, which they didn't do. They just did a whole. And so this year, this is the first Monetary Policy Committee meeting of the year, and they have decided to cut the rate. So yes, last year was about 25 basic points, but now they are doing 50 basic points, which is a departure from before when we have that hike, and hold.
Very much, Muktar, for speaking with us.